Upstart Financial just went public in 2020, and the company is already announcing a $400 million share repurchase program. We'll talk about that and more on today's show. What is going on, investors? Hopefully, guys are doing well out there. Time to talk about Upstart Financial, or Upstart Holdings, ticker symbol UPST. Over the last year, stock's basically flat, just up 2.3%. Probably doesn't include the regular session gain that this stock put up at 4.31%, up to about $109 per share. But in the after hours, hello, 25% gains as this stock is near $136 in the after hours. Talk about what this means from a technical perspective. Have you missed this one? Stock might go up 25% tomorrow. You might think, oh, I've missed it. Well, there's a reason why this company announced a $400 million share repurchase program, because even after going up 25%, I tell you what, from a technical perspective, this one doesn't look too bad. Now, what else didn't look too bad were these Q4 numbers that Upstart Financial brought in. Revenues coming in at $304 million. That's up just 251% year over year. Hello. And that beat expectations by $42 million. I think we just think broadly too right now. We'll show you this too on the revenue side as well. They had this $304 million in total revenue. For the full year, you're sitting at about $848. It looks like in the upcoming year, because they gave us Q1 guidance as well, that's expected to become between $295 and $305 million. So if they come to the upside of this guidance, which we'd expect them to over at Upstart, well, we're getting quarter over quarter run rate in that 300 million-ish range. That gets us rounded up to about $1 billion worth of revenue. You got an $8.5 billion valuation on this one. You also have a shade over $1 billion in cash. Investors are starting to connect the dots. This company is actually a decent value, and I think the CFO, when they announced the share buyback, they're seeing the same thing that some investors are doing as well. The stock is well at the highs. Stock was up over $400. So tell anybody up here that this stock is moving in the right direction. There's certainly a ton of bag holders when it comes to Upstart Financials. But these financials look pretty good based on where we're at today. Look, if you bought this one 4 or 5 times higher than it is today, well, look, sometimes you pick stocks in the wrong direction. But right now, you're profitable from an operating perspective. You're profitable from a net income perspective. You're growing your revenues very, very high. So the valuation is starting to make a lot more sense over at Upstart Financial. Now, we'll talk a little bit more about this buyback program as we move through these financials. Let's just go to it right now. So this $400 million share repurchase program, really interesting from the fact that Upstart Financial just recently went public in 2020. This is a company with about exactly $986 million worth of cash. They've got another 200 or so in restricted cash. It's basically about almost $1.2 billion in cash. And so $400 million is actually a pretty significant amount of this company's cash pile, okay? So I wouldn't necessarily think that the company is going to be able to execute on that $400 million. And look, whenever a company announces a buyback, they don't execute it usually all at once. They usually refer to when they're going to do it very quickly as an accelerated buyback program. I didn't necessarily see that announcement in here, but we've seen that with other companies out there, that they announce these accelerated buyback programs, which basically means they're going to take that money and really very quickly buy back the shares. Based on what we're seeing here from a financial perspective of the cash on hand with this company, I wouldn't necessarily expect that. On top of that, you got about $695 million worth of debt on this company's balance sheet as well. That's relatively significant when you have just $1.8 or $1.2 billion worth of cash. And so, look, this company will execute on this buyback, but I wouldn't expect it to be one of these kind of accelerated ones, even despite the fact that from a technical perspective, this stock is still well off the highs. Now, from an earnings perspective, things look really good over here, okay? We have this $304 million worth of revenue. Our costs came in at $244. Those accelerated quite a bit year over year, but you would expect that, right? Sales and marketing more than tripled, okay? All these costs basically more than tripled, but then we have to keep in mind this company was able to grow their revenues by 251%. And in a lot of financial and kind of banking type environments, you don't always recognize the full value of your customer right in the quarter that you acquire them. So some of this marketing spend will actually spread out revenues down into subsequent quarters as well. You get one customer kind of in your net, then they're able to sell them other products or additional products down the line. So very positive from all that sense. So you take this 304 in revenue, you minus off our 244 in cost, and we get up to $60 million worth of income from operations. Last year we're sitting at $10 million. You see, for the full year, just paints a glorious story. Off $848 million worth of revenue, you had $707 million in cost. You get to $140 million in income from operations. That's fantastic, considering last year you were sitting at just $11 million. This company has completely turned the corner from a profitability perspective. Now, yes, these costs are continuing to accelerate, but so are our revenues. And as long as you believe this company is going to continue to do that, well, the valuation does make a little bit of sense. Now, from a cash flow perspective, paints an even better story. As you'd expect, when you go from net income of 5.5 all the way up to 135, your cash flows absolutely love that. Cash flow positive of 168 on this company from a full year. That's $168 million. Now, what I did want to show you, though, it's really interesting. So this company did some borrowing last year. So they borrowed about $718 million. I showed you the debt that they had on their balance sheet. Here's proceeds from a secondary offering. This is them selling more shares. So typically when a company goes public, they issue a certain amount of shares, or they release a certain amount into the public markets. Well, what they often do is a secondary offering, which is essentially when the stock trades for a little while, they release even more shares. So they sell more shares into the market and raise a little bit more money. So it's really interesting that just in the last year, the company actually did a secondary offering that brought in $263 million. And here they are, just a couple of months later, announcing a $400 million share repurchase program. Now, what is the CFO and the company seeing is I actually kind of like the announcement of this buyback. I don't necessarily think they're going to be able to burn through it based on their kind of cash on hand, but I like this from a technical perspective. I hate stocks like Facebook, which spent $20 billion on their stock at the highs to only see their stock completely fall off a cliff. This company has seen their stock go from over $400 per share last October to under $100 more recently, and now it's up at 134. You might ask yourself, did you miss this one? Is Upstart kind of missed the boat on this share repurchase program? No, absolutely not. In the very, very shorter term, down in this little quadrant down here, when you zoom in, unfortunately, the volume kind of mingles with the candles on this chart, but you're creating a higher set of lows here. And then tomorrow, if these gains in the after hours hold, right near, you're sitting about $134 per share, you should put up a candle somewhere in this range up here, and that is pretty high, but it is bumping into what I just put a line into overhead resistance, but with this one I had trouble finding the exact area. But there's overhead resistance over at Upstart, and you're seeing it in the after hours. Okay, the stock is not able to get above 139-ish all the way up to about 169-ish. There's about a $30 range here between $139 per share and about up to $169 per share, where sellers have materialized in the past. Okay, they materialized just shortly after IPO. The stock peaked out in that range, and when it did, the stock would get rejected. Now, fortunately, there is some support down here at 109. We also know this 170 level is a critical area, because once you got above it, it literally went from 170 all the way up to like basically $400 per share on this one, and it's just simply come crashing down. So you might ask yourself, I missed this one. It's up 25% in the after hours, or maybe even tomorrow this thing's ends up being 15, 18, 19%. I wouldn't be concerned, okay? Because from a technical perspective, we're going to put up a candle like this, and we're just creating another series of higher lows here. So from a technical pattern in the very shorter term, again, I know a lot of you watching are probably still feeling the pain on this one. You bought up here over $170 per share, so you're waiting for the shares to get back there. Well, you gotta churn through this box here of 130 to 160. So look, you might have missed this one just in the most recent gain that it's made. It would have been hard to pick the bottom on this one and hard to step in before earnings. But now we've got confirmation of earnings. We've got confirmation of this buyback. That should put an area of support underneath this stock. I could see from a fundamental perspective and a technical perspective coming in here and nibbling in these areas. Okay. Now, when is this stock really going to truly break out? Well, you need to get above the 170 range. So if you want to be ultra patient and ultra safe, you can actually wait until this gets gets over 170 and you're like, oh, I want to pick the bottom, or I would have missed all these gains. Well, no, if you get up over 170 on this one, it's like flying through like the cleanest air you possibly can find. In fact, there's a gigantic gap here between 262 and 300. If you could somehow get the stock into this space, it should chop through this area like a hot knife through butter. So I really like this one if this stock can get its momentum and get up over here. But again, they've got to follow that through with some results as well, because the market's just completely punished this one. It's got it down to a valuation that makes way more sense than it did. But if we obviously, the higher this stock starts to churn, the more those valuation questions start to rise again. So I like what this company is doing. Interesting play, interesting from a technical perspective, and probably one of the most interesting share repurchase programs I've seen announced in the stock market in a long time. A recently IPO'd company, a recently company that's done a following offering, buying back their shares as it crashed from all-time highs just a few months ago. I like the move. Shows that this got some aggressive management over at this company, and that is something to respect as well. That was Upstart Holding. Hopefully you guys enjoyed this video. Back again soon with more. Good luck with your investments.